Welcome in, Mark Avallone. He is president at Potomac Wealth Advisors. Mark, it's good to chat with you when the sun is up. Thanks for coming on The Exchange. First off, before we get to some of the picks that you like, the macro market, do you expect more volatility and maybe more losses before the year's end?
Yes, Brian, and we are looking at a very choppy market. It's very hard to get excited right now with new money to rush out there and put money to work when you have so much global uncertainty. The Ukraine war has residual effects with food prices and the energy war that you talk about a lot over in Europe. You have inflation, an aggressive Fed, earnings estimates that are likely to come down. Against that backdrop, it's really hard to get gung-ho and back up the truck for stocks.
Is there something that would change that?
Well, clarity from the Fed. And when the signal happens that inflation, next month's job report, that would be an indication that maybe we've turned the tide. Going from 9.1 to 8.6 or whatever we did last month, that's 1 month, and that's de minimis. If we start seeing a trend in inflation coming down, and we see that with energy of all things, oil prices, oil futures are dropping. If we continue to see lumber dropping and the root causes of inflation relaxing, and then the Fed language following, I think you're going to have another melt up like we saw in June. But that could be the time for investors to think it's more than a head fake.
All right, let's talk about this idea of boring but beautiful when it comes to equities. You like a name like a Raytheon and some of the small and mid-cap regional banks. I mean, when I think of boring, I think about regional banks.
Well, regional banks can be boring, especially if they're well managed. And that's the point about knowing where your money is going. And locally here in Washington, we have a relatively strong economy. That's part of the driver for why I like regional banks and regional banks that have a presence here. And names like Sandy Spring Bank have been well managed for generations. And Truist, which is still benefiting from cost cutting with their merger with BB&T last year. So those are two institutions that are well run here in this region. But in the financial space, insurers are very attractive. They have nice dividend yields, strong cash flows. They own real estate, which can fight inflation, but they also have a lot of cash on their balance sheet, a big bond portfolio. That's going to earn more income. And all the damage, or hopefully most of the damage, from the rise in rates that have hurt bonds is in the rearview mirror. So looking forward, we think insurers are an attractive place.
Wow, pretty interesting there. What about anything in technology that you would consider?